money in a startup. There is no point putting money in a startup where you're already fighting with a founder. And I always tell startups, you need to run away from a business angel if you already feel from the beginning that the relationship will be difficult. You need to make sure that you follow your guts. If you feel like there are too many red flags when you conduct your due diligence or even at the deal negotiation phase, then you should probably, run away. Here we are talking a bit more about the term sheet. The only important thing indeed that you need to remember from this slide, if it's not on paper, it has not happened. We cannot emphasize that enough. There are so many stories about, people who said, but I had given you $10,000 and verbally you told me that I would get 5% of your company, but that you didn't have time to draft the share certificate, that I should trust you. And then 1 year down the line, you get nothing in return. These things happen on a daily basis. I'm sure you're reading the news. Even in large startups, we see, like a litigation process. So you need to make sure that you put everything on paper so that expectations are clear on both sides. Now we just want to spend a bit of time on the process once you have invested in the startup. So you have identified the startup, you have conducted the due diligence, you're very happy with what you find, then you have negotiated with the company, you've been able to invest 100K with your investment club in the company for like 20%, you have negotiated a board seat, and now you have the ability to monitor your company. It's very important that you monitor your company and your portfolio as a business angel. But obviously, you can imagine that if you have a portfolio of 20 companies, you will not be able to check every day with every single entrepreneur, hey, how is it going today? Which is why I go back to my point from earlier. You need to have a balanced portfolio. You need to have some startups where you know that you just need to sign a check and you don't hear from them for 5 years. I'm obviously kind of exaggerating my point. And then you need to have some startups where you need to add a bit more value, and you know that at least once a week or once a month at the beginning, you need to interact with the startup to provide some guidance, some help, or to introduce them to the right people. Also, it's quite important to try to find synergies in your portfolio. So let's say you have a startup, just giving a random example, a health tech company who is helping medical doctors booking appointments, helping patients booking appointments with medical doctors online, or organize virtual, medical sessions. And then if this company is in your portfolio and say, oh, but Hannah, we don't know how to make sure that our patients can pay online. If you have invested in a fintech companies that is providing online payment services, then obviously it's relevant to introduce the startups to each other and to make sure that they are adding value to each other. It's quite important to understand that typically you will have to do follow-on investments in some of the startups you're backing. So people have different philosophies, but often some people will tell you, when I have my money to invest in startups, between 60 to 80% of my capital will be invested in startups, and I will always reserve between 20 to 40% of my capital to follow-on investments, meaning additional investment that I will have to make in my existing portfolio companies in the next few months and years. It's very important to add value to your startups through relationships and network access, through mentoring, especially if this is requested by the startup. And then I made the point around you are serving on the board of the company. So this point is, I wouldn't say controversial, but people have different philosophies. Some people who are not controlling, but they say, I want to know what's happening to the startup, I want to have a board seat, great, go for it. But you have to understand that there are legal and financial implications to sit on the board of a company. Also, if you just make sure that the company, the startup, has some basic reporting obligations. So the startup has to write to you a report once a month, once every 3 months, where they have to explain customers. We have acquired this amount of customers, and financials. We have this level of turnover this year, this month. Then it might be enough to have these written reports, and you might not need to serve on the board of the company. So on this slide, again, we just want to remind you that investing in startups is very risky. Long-term investment, there is very few data that you can rely on to assess a business opportunity. So you have to be very disciplined when it comes to your investment. You need to know the right people, to have the right industry knowledge. And you have to think about your exit strategy before you invest or when you invest in a startup. So again, as I said, you have to understand that in your portfolio, you have some startups where realistically you think, okay, in 2 or 3 years, the startup is likely to be to receive additional funding from a VC. Or some startups, you might be like, okay, these startups, it's probably an IPO in 7 years. It's not necessarily what is going to happen, but you have to keep this type of things in mind when you invest. Yeah, so here we just want to talk about the exit process. Again, I'm not too sure whether it's really relevant for us today, given that it's just a quick introduction to angel investing. So I think today I just want to really focus on who is a business angel, how can you invest, when can you invest? And I think these are the questions we need to address more than how to exit a company. Before I open the session to question, I just want to remind you again why ABAN, the official African Business Angel Association, can be relevant in terms of organization. Obviously, you would have access to all the investment clubs that are registered to the platform. As I said, you can learn from other investment clubs that have been investing in startups for years in terms of, how to identify startups, to learn in terms of due diligence process, to learn in terms of how did they manage their exit process, how did they add value to their startup. I'll let you read those 2 slides. I think one point I want to highlight, on this slide, if you're part of ABAN as an investment club, you can also qualify to participate in a matching grant fund, meaning that if your investing club invests 100K in a startup, then the ABAN associated grant fund will also invest 100K as well. Obviously, ABAN is doing a lot of work in terms of releasing, newsletter and research reports on, the angel investment space in Africa, which is always very useful when it comes to your knowledge of the angel investment industry on the continent. And obviously, you can also build a relationship with other investment clubs and other business angels all over the continent. It's always very useful. Here, just for your information, if you want to learn even more about angel investing, there are 2 books that we recommend that are quite well-known in the industry. And I want to thank you and I think I will ask Timi or Fadila to open the floor for questions.
Okay. Thank you so much, Hannah, for the great presentation. Please, if you have questions, now is the time to raise them. You may raise your hands or send your questions in the chat box.
Sorry again, if you don't speak, please feel free to put yourself on mute. So I'm going through the chat box now, and thank you for all the people who have introduced themselves. Interesting, David Ross, who has made like 15 angel investments. Well done to you. Hi everyone. I can't see any questions at this stage. No questions. No questions.
Yeah, we do have a question from
a few questions. Okay, I can see questions. Sorry, I can see questions from Octavius. Hi, good afternoon, Octavio. Thank you very much for all the questions. So question number one, do angels conduct the due diligence by themselves, or is it advisable for them to use consultants? So it's a good question. Obviously, I think most of the time business angels actually conduct the due diligence by themselves because typically angel investments are quite small. So if you already start using a lot of your money, paying consultants to conduct the due diligence for you, then probably you will not have a lot of money to invest in the startups. But it's really up to you. If you don't feel comfortable enough to conduct a due diligence process by yourself, sorry,
I want to know how to do the drink. I want to drink cool.
Sorry, I'm not sure who is speaking. Can you please put yourself on mute? But typically, Octavius, investment clubs will conduct their due diligence by themselves. And because there are 5, 10, 15 people at least looking at the business opportunity, it's quite easy to come up with a view on the startup. Question number two, which valuation method is ideal for a price round in the early stage? Again, there is no preferred methodology. Frankly, I've seen investment clubs and VC funds using different methodology. Again, some people will just apply a systematic, investment structure. And I think like incubators or accelerators like Y Combinator do exactly that. So they don't do valuations per se. There are some other VCs who use a typical, a trading multiple methodology where you use a multiple of sales, typically because the startup will not be profitable yet. There are a few other methodologies that are a bit theoretical from a perspective that we have put in the presentation. But again, I think it would warrant to have another session with ABAN just on valuation if people want to talk about a specific topic. Should angels opt for an advisory board role as a condition? Definitely not. I've seen some investment clubs requesting an advisory seat in each of their startups. I've seen some investment clubs not doing that because at the end of the day, a seat will formalize, I guess, the relationship you have with the entrepreneur. But if you're dealing with an entrepreneur who doesn't want to share information with you, whether you have a seat or not, will not change the fact that you have a bad relationship with the entrepreneur. I've been in scenarios myself where the entrepreneur trusts me so much that he's actually or she's actually sharing with me more information than if I was a board member myself. So it's really, on an ad hoc basis that you have to decide whether it's relevant for you to be an advisory board member. And frankly, I've seen people doing different things. Overall, what are the costs associated with closing an angel round deal? Yeah, so the cost depends on how you structure your investment. Are you investing by yourself as a business angel? Are you using consultant to do the DD? Are you using your own lawyer to draft the term sheet? Are you using a term sheet that's already available in the market? If you go on a website like Y Combinator or VC for Africa, there is already like a standardized documentation that is available. So frankly, you don't necessarily need to pay for it. So again, the level of cost you will put in your transaction depends on what you want to pay. We have a great question from David Ross. What's the process for joining ABAN? Fadila, Temi, do you want to answer this question?
Yes, thank you, Hannah. So for ABAN membership, we have a list of requirements. Please send us an email at secretariat@abanangels.org. I'll put that in the chat box as well, or to temi@abanangels.org, and we'll give you the full list of requirements. Thank you.
Is this clear? I think it's clear. Great, thank you, Temi. So question number 2, what were the 2 books recommended? The presentation will be shared and the recording will be shared to all of you after the session, so you will have the title of the book. Can you give us more information about the grant matching fund? What are the requirements for an angel network in order to qualify for it? I will let Fadila and Temi to answer the question as well, but basically, if you're an ABAN accredited angel network, then you would be able to use this grant matching fund. But Fadila, Temi, I'll let you maybe follow up on this question as well.
Hi, Anna. This is Fadila connected. I did not hear the question very well. Can you please repeat it?
The question is about the grant matching fund, you know, the catalyst fund. So the question is, what are the requirements for an angel network to qualify for it? So I think first you need to be an ABAN accredited network. And I think once you are a member of ABAN, you have access to it.
Correct. That's perfectly correct. So you have to be a urban affiliated network. And of course, if you're an individual investor and that you have identified a startup in which you would like to invest in, you automatically qualify as a beneficiary for a co-matching fund. So as an investor, the requirement is being part of a network that is in turn affiliated to ABAN.
Fantastic. Thank you very much, Fadila. Then, do angels engage in financial controls like being signatory on bank account and having real-time visibility to transactions? Definitely not. You are not, I don't even know, you're not, how can I even say that? Like, you're not the master of the startup just because you have providing funding. So obviously, depending on the financing tools you have used, if you're an equity provider or debt provider, your rights and the reserve methods you have in the startups can vary, but you will typically never have financial controls on the bank account or access to the emails. It's not how it works. And by the way, you might not want to have that because the day something goes wrong in the company, and if there is indeed a lawsuit at the end, you want to be able to protect yourself legally and to explain that you were not actively involved in the management of the company. Because if you're actively involved in the management of the company, even if you can say, oh, but I was just a business angel, I was a minority investor, if people can prove that you had access to the bank accounts, you had access to the emails, you even interfere in the day-to-day operations, this can have negative legal impact on you. And to be quite honest, it's not market standards anyway for business angels to have this type of control on the company. Sticking to your lane in terms of industry, what about people who are functional specialists? No, of course, those people can also be business angels, right? I guess my point was more at the beginning, right? It's maybe easier to start in an industry you understand it better, or an industry you are passionate about. And then you can start to expand to other industries when you're clear in terms of, for instance, what are the traits that you're looking at in a founding team? What are, the type of DD process you want to, what is the type of DD process you want to conduct for a startup? When it comes to me personally, I know I like to look at, agri-tech, fintech, health tech to some extent, and there are some other industries that I don't like to look at because I just don't understand them very well. I don't have the network and I'm less interested. Should an angel investor accept advisory board role even when they did not invest in the startup? Yes, this scenario can happen, but I suspect that when you say you didn't invest in the startup, it means that you didn't invest cash or money. But remember that you can be an angel investor also if you dedicate time to the startup and if you share your network with the startup. So I always tell a startup, would you rather have an angel investor telling you, I'm taking 5% of your business because I'm giving you let's say $5,000 in cash? Or do you want a business angel who is going to tell you, I'm not going to invest in cash in your business, but I'm going to introduce you to the CEO of whatever company who is looking for a startup to, roll out a program that is going to bring you 1 million customers. Right? And in that case, if you're a business, an angel investor bringing this kind of value add, then obviously you could be entitled to have an advisory board role, even if you have not invested cash in the business. What's ABAN view on using multiple on invested capital instead of IRR? I don't think ABAN needs to have a view. It's not a view that an organization would stand. It's more like if we take a step back. It's more like which metrics is the most important. Both metrics are important when you consider an investment. Just for everyone, when we say multiple of cash, it's basically typically when you will hear someone say, I've made 5 times or 10 times my money. So it's literally the value of profit you've made based on an investment. So obviously it's very important to look at these metrics. And you know that if an investment made you 10 times your money versus an investment who made you 2 times your money, the investment who gave you 10 times maybe perform better. However, the IRR will give you another indication or an additional indication in terms of timing. The IRR will literally tell you how long did it take you to achieve these 10 times or these 2 times. I will give you another example. It's always better to do 10 times within 2 years than 10 times within 10 years. And the different, in both cases, you make 10 times, but it's either between 2 years or in 10 years. And the metrics that will allow you to see what's the difference is the IRR. So the IRR, if you do 10 times in 10 years, and sorry, I don't have the exact number in front of me, but let's say it means that you've made an IRR of 5%. I'm just giving a random example. But if you do 10 times in 10 years, it means that your IRR is probably like 50%. So frankly, as an investor, I would strongly advise that you keep both metrics on top of your mind. And sometimes in your portfolio, you want some investments to give you a cash on cash multiple or a multiple of cash. So you want this investment to do 10 times because you have invested, let's say, $1 million. And if the investment gives you 10 times, it's still $10 million, regardless of how long it takes. But then you also want investment which give you a high IRR and a high internal rate of return. Will give you an indication of this is an investment probably where it took you 2, 3, or 4 years to get your money back. I'm simplifying a little bit, but this is how you can use those 2 metrics in a simple manner. Thank you, Benjamin. And I think this will be the last questions we take because we are running out of time. How can I link up with other business angels in Africa to share knowledge? Well, Benjamin, you're based in which country? It's not very clear, but I will strongly suggest that you send an email to ABAN, and then depending on the country in which you are, we can probably refer you to an investment club. Would be happy to take you in and to review fashion, entertainment, or health investment with you. Can we use a grant matching fund for our current living deals? The grant matching fund is active, Umulinga. So obviously, I think to be able to use the matching fund, you need to close the deal, right? And once you've closed the deal and you have invested the money yourself, then you can apply to get a matching amount. I think
Hannah?
that's it. No question.
Hannah, but if we
Yes.
close the deal, thank you so much for tonight. But if we close the deal and the startup doesn't need more money, what do we do with the matching grant?
The matching grant.
Because we can't be so yeah. If I can take that, because Umulunga, we can't be in a scenario, I suspect, where you would request a fund from this facility, and then the facility disburse the money in the company, and then the investment club at the last minute is like, oh, actually, we're not investing.
Okay, so the
You see-
matching
see
grant
my point?
is free money for the company. It's not equity.
Typically, it's not equity, but we'll have to assess that on a case-by-case basis. But actually, not even, sorry. Fadila, you can correct me if I'm wrong, but I think the fund will invest in the same structure, or is it really a grant that is
It is
provided?
a grant. It's an equity free.
Oh, so it's a grant.
Okay.
Yeah, it's a grant.
Okay, thank you. I'll send a few applications then.
With pleasure. All right. Thank you,
Bye-bye.
everyone, for attending. Okay, there is another question. We have to run.
Before-
So you will. What about advisory roles which translate into sweat equity? Well, it's again a negotiation, right? But typically, when it comes to advisory board role without a cash investment, I've seen people getting between 0.5% to 5% maximum. And really the mean is between 0.5 startup. It's really that you are introducing the startup to, Richard Branson and Elon Musk, and you're really changing the life of the startup.
Anna,
And I think
Hannah,
that's it.
before you close the session, I would like to say thank you to all our network members who were able to join today, particularly the Zambia Business Angel Network, the Future Female Invest Angel Network for Mauritius, and the Botswana Angel Network, as well as the Rwanda Angel Investing Network. Thank you, all of you, for joining us. And thank you very much, Hannah, for this brilliant presentation.
Thank you very much for the organization, Temi, Fadila. Thank you everyone for joining, and see you soon. And hopefully we'll host another session in the next few months as well, based on your feedback. Thank you. Bye.
Bye. Bye-bye.